See, there's some big things happening in this XRP news. Very, very, very big. But beyond the XRP news, there's some very interesting things happening in the cryptocurrency industry right now. And these are just some recent stories. We've covered a lot of stuff like this over the last 6 months to a year. All these little things starting to add up, starting to put the blocks in place, the building blocks in place for a new massive market cycle to play out, right? Bull runs always come back. It's only a question of when they do and how long the bear markets last. Right now, it seems like we're heading in the direction of, wow, we got a lot of very positive things lining up for a massive market run to come. So let's take a look at this one first here. Europe just got its first Bitcoin ETF, which is a pretty damn big deal, right? EU's kind of a big deal, right? This is the third largest economy in the world if you count the EU as a whole. We have many members in the EU, France, Germany, for example. They are massive economic players in of themselves. So this is pretty damn big to see a Bitcoin ETF getting released for European markets. Now we just need the USA, right? So this is another massive catalyst, right? Now, to be clear, Europe has had Bitcoin exchange traded notes for a while now. Slightly different, but here we go. We got a Bitcoin ETF coming to Amsterdam's exchange some point in the near future. So it was set to debut last year, but now it's going to come out this year. So a bit delayed, but hey, Europe's getting a Bitcoin ETF, man. So that's pretty damn exciting to see that happening finally as well. That can bring a lot of money into the market. Third biggest economy in the world, the EU as a whole. So pretty damn big deal there. And then the American Bitcoin ETFs will come. Really sets it up for a pretty crazy 2024, I think. None of this stuff has immediate overnight impact, right? It takes a while for these stories to really play out and have their full impact on the market. This one here, yearly absorption rates from shrimp to fish. This is something we talked a bit about before, but this time is different, as Oliver points out here. There's something truly massive brewing, something epic. I believe that when it hits, it's going to shock the world. Look at this. You are being outstacked. Get to work and stack harder, he says. Very, very interesting, right? See, in previous cycles, we've seen peak stacking happen at peak market prices. I mean, look back here to 2017, right? Back in 2017, we had the biggest amount of stacking happening right at the market peak, right? That's when most retail traders were getting in. And we had a good amount of stacking at the peaks for Bitcoin as well. But what is super different this time is that we've had an incredible amount of stacking happening during the bear market when prices are massively down. For the past 6 months, we've seen unprecedented, actually, literally is unprecedented stacking of smaller accounts aping into Bitcoin in a massive way. And it's not just Bitcoin. Bitcoin is representative of the entire market, something to understand. We've seen massive buying for Ethereum. We've seen, again, massive on-chain activity for blockchains right across the way. This bear market has been the most active of any cryptocurrency bear market in history. The amount of users who stayed here is absolutely ridiculous. And that's proven by on-chain data, right? That's not just me saying it. That's just me saying, hey, look at my tweets or whatever. No, that is real on-chain data that is saying this. It's very encouraging because if it's this busy now, wait till we get a crazy bull run kicking in, man. Holy cow. This one here from Charles Edwards. Despite trading at $30,000, Bitcoin has the same relative value opportunity today as Q4 2016. Price continues to trade below global average production cost at 36K. Now, this is a very, very interesting statement because essentially what Charles is saying is that buying Bitcoin now is the equivalent to buying it Q4 2016. Now, if you weren't around back in those days, late 2016, the price of Bitcoin was $1,000 and went up to $20,000 about a year later, right? So that was the start of the parabolic phase for that 2017 bull run. So we could be in a similar situation. At least this is what the data is showing us right now. Pretty interesting, right? Also, we have this very big story here. And this is from Senator Cynthia Loomis. So today, her and Senator Gillibrand, they're reintroducing landmark legislation to create a federal regulatory framework that allows crypto businesses and crypto investors to prosper in the United States while protecting consumers from bad actors. Man, the USA so desperately needs to do this. I hope that they do it sooner than later, to be honest, because it has just been way too long of the USA dragging their feet, or, not even just dragging their feet, having literal sabotage attempts. I mean, the current White House administration, they hate crypto. They've been working very hard to try and screw crypto investors. And despite the fact that, 1 in 5 Americans that owns crypto or something like that, they don't care. They're not here for you. They don't like you. They're quite happy to destroy you financially because they're there to protect the banks. They want to protect JP Morgan. They want to protect BlackRock and Goldman Sachs and all their buddies, protect the US dollar. They're not interested in you and you getting rich. That doesn't serve them. That doesn't help them. No. So that also is a thought that this may not pass. Unfortunately, nice to see it happening, and we're going to go over what this bill is all about. However, realistically, in the current climate, I would imagine that if this did come across President Biden's desk, that he would veto it, which is unfortunate. But he is, beholden to Wall Street and beholden to the dollar industrial complex, let's say, and they are relatively anti-crypto innovation, which is unfortunate because it's a massive miss out for America, massive loss for America. And all this business is going to Hong Kong, it's going to Dubai, it's going to the UK, it's going to France. Everybody's got the doors open saying, hey, American developers, hey, American companies, come here, come work with us, set up shop here. Water's real nice, hop on in. Anyway, Loomis Gillibrand, Responsible Financial Innovation Act of 2023 fact sheet. So it would do the following. Places crypto assets within the regulatory perimeter. Recognize that crypto assets are here to stay. 2, fully regulates crypto asset exchanges, requires crypto asset exchanges to register with the Commodity Futures Trading Commission, so treating them as commodities. 3, safeguard consumers, creates guardrails to prevent another FTX-style event from occurring through strong custody and lending limits. Number 4, promotes responsible innovation. Crypto assets will be a part of the future of finance, and America must continue to lead the global financial system. 5, securities and commodities, upholds the Howey test governing the presence of an investment contract. Number 6, combats the use of crypto assets for illicit finance, establishes an interagency law enforcement working group. 7, requires payment stablecoins to be issued by depository institutions, so creating a stronger regulatory framework for payment stablecoins to be issued by state or federal banks and credit unions. And number 8, appropriation and taxation, updates tax code enabling crypto industry to fund its own oversight. It's good and bad there. But the thing is even good and bad, a mixed bag, say, of legislation actually getting passed is a positive thing because it actually provides clarity. Once clarity comes out, it's like, hey, well, at least we know what the rules are now. But the current situation with the SEC is we know the rules, but we're not going to tell you, which is ridiculous. They don't even have the rules. They can't tell anybody what the rules are. They're just making it up as they go and suing everybody to try and see what happens, see what the courts say, because they don't want to do anything. It's a pretty ridiculous situation we have right now. And these kinds of regulatory actions in the USA would be really, really good. So yes. Now, by the way, before we get into the next stories and the next things that I think are really indicating a very big cycle brewing up, if you're not yet subscribed to the Wealth Master newsletter, you got to get signed up. And it's a free newsletter, by the way. You can join our 80,000 weekly readers. We talk about altcoins. We talk about the biggest news happening in the market, airdrops, DeFi, NFTs, and much, much more. The best newsletter in crypto, and you get it free to your inbox 3 times a week. Link down below where you can check that out. Now let's talk about the dollar index. Let's talk about the dollar index here. So, very interesting what we're seeing with the dollar index because the dollar has been cratering, absolutely cratering for a variety of different reasons, but the dollar is heading down pretty strongly here. You can see currently it's broken under 100 for the first time in a very, very long time. Last time we were talking about the DXY, we were talking about how it's got this important zone of support here around 100 to 101. Nope, broken right through that finally. This was sort of the final rally. The downtrend has continued. It never put in any higher highs. It's cooked. It's looking pretty cooked right now anyway. And what does that mean? Why are we talking about the dollar index falling down? Well, of course, because this is good for risk assets. Check out this chart here from Will Clemente. Since everyone's talking about the DXY's weakness, here's Bitcoin's price plotted against the year-on-year change in the DXY. Very, very interesting to see here, because the blue line, that is the price of Bitcoin. So we can see a pretty strong correlation. We have massive, massive run-ups in dollar strength. It tends to correlate with Bitcoin bear markets. That was true back in 2015, 2016. That was true to an extent in 2019. That was true as well in 2022, right? And now when we have lows or falls in the dollar strength, that tends to correlate with massive rallies for Bitcoin. So for example, Bitcoin peaked in 2017, just a few weeks before the DXY bottomed. Similarly, in 2021, we saw Bitcoin peak right around the same time that we saw the dollar index hit its bottom. So they're kind of inversely correlated, and a falling dollar index is good for risk assets. And we've seen the money flowing into stocks in particular. Tech stocks are up big time. Nvidia just hit an all-time high. Apple cracked over $3 trillion the other day. Huge money flowing into the tech space in terms of tech stocks and tech equities, right? But now that we have this clearance potentially from the SEC, where the SEC has lost their XRP case in court, then that means that we could really see a lot of money starting to look for risk in the crypto asset space. So very, very interesting. Also, we have to calculate here for the inflation situation. So core inflation, CPI inflation has fallen down to 3%. It was below the expectations of 3.1%. Core inflation down to 4.8%, below expectations of 5%. First time the core CPI has come in below 5% since December 2021. That's pretty big news, right? Because falling inflation means that it's a lot less likely we're going to see more interest rate hikes from the Fed. The pressure is going to be really on strong right now to say, hey, we got to stop the interest rate hikes because the inflation is down to 3%. Remember, their target's 2%. They even said in the past, well, if we get back to 3%, it's kind of good enough. Well, back to 3%. And 2%, that could be next month, right? We are very close to hitting their 2% target. And so if inflation has been tamed, as it seems to have been so far, then the argument to make more rate hikes really doesn't make a lot of sense. Now, the Fed might do it anyway because they want to break more stuff. They're intent on, well, we got to get everybody to lose their jobs, lose their houses, lose their cars, lose their families, and destroy the economy. Maybe. But it puts a lot less likelihood that we're going to see a much more aggressive stance from the Fed moving forward. So that fall down in inflation is very, very big news, because this inflation monster has been with us for quite a while. We've gone down from 9.1% down to 3% in 7-8 months or something like that. It's been pretty fast, but it's a damn big story. And that is, again, the kind of fuel that the market needs to really kick off and go crazy. So it's a good thing to see. Very, very good thing to see. And of course, 2023 has been crazy because in spite of the bearishness, we were all bearish. We were all bearish back in December. Who wasn't bearish back then? We were still buying. We're still clicking that buy button on Bitcoin, right? But it's pretty crazy times back then. But in spite of the constant calls for, mega Armageddon recession is coming, the end of times is coming, et cetera, stock markets have been pumping like crazy all year. Inflation's going down. Stock markets have been going up. It's been a very interesting time. And one other thing that I want to mention around these 6 reasons that things are getting pretty crazy out there in crypto land is this story. So Google Play changes its policy on tokenized digital assets, allowing NFTs in apps and games. Super interesting story, because essentially what this means is that we can see all kinds of games starting to get released on mobile phones. Most people use their mobiles basically all the time. And so if people can start playing crypto games on their phones that they can get in the Google Play Store and increasingly in the uh, Apple Store as well. Apple still has a way to go on this whole conversation, but still they've made some inroads. When that happens, everybody's got a phone in their pocket, man. Everybody's got a phone in their pocket. And now everybody's going to be able to start playing blockchain games where they win NFTs and they win free tokens. They have to download wallets and they have to buy a little bit of Solana. They have to buy a little bit of whatever else it might be. So this is a very big story in terms of opening up the floodgates to more mainstream adoption for the cryptocurrency industry more broadly. So very excited to see that story coming out here as well.